Hey everyone, Greg here from Investing in Gold, and today I want to cover the type of news headlines that can often cause the price of gold and silver to rise. Now, I want to break this video into two different parts because there's headlines that can cause the price of gold and silver to rise, and this is an area where you can definitely make money, but there's also a bigger picture, and this is where major wealth is created. So part one is important to understand because it can often lead to part two, but also there's money that can be made in part one. And I want to save part two for the end because that's the big kaboom. Like, this is what you really need to understand when it comes to money and precious metals. So let's start with these 5 headlines, but before I do, keep in mind that the more of these headlines that are happening at once, the better it is for precious metals. And the bigger these headlines are, or the bigger the news story is, the better it is for precious metals. For example, if all 5 of these things that I'm going to mention are happening at once and they're all really big stories, well, it's very likely the price of precious metals are going to increase, and it's very likely they're going to increase a lot. So keep that in mind as we go through this. Let's start with number 5, and that is currency devaluation. Anytime you see news headlines that talk about a currency being devalued, could be a good time to invest. Right now, again, keep in mind, sometimes there's news stories out there that are kind of bullcrap, so to speak. So you got to pay attention to the news story and actually read it. But if it's a major story, that's definitely something you want to pay attention to. Number 4 is monetary policy. If you see announcements about major central banks changing interest rates or any of the other type of monetary policies, that's a time you want to pay attention. Number 3 is stock market volatility. Now, as I talked about, the bigger the news is, the more likely it is to change and the higher it is to go. Same thing with the stock market, whereas if it's a major stock market fluctuation, typically when the stock market goes way down, the price of gold and silver go up a good bit. So for stock market volatility, if you're seeing major downpours in the market or downside, so to speak, or even crashes, well, that is a good time to start investing in gold and silver typically. And a good example of that is the 2008 financial crisis, where we saw people who had stocks and who had 100% money in stocks lose like 50% of their retirement savings, whereas people who had precious metals more than doubled their money in some cases. I think from 2008 the price of gold was $850, whereas in 2011 it went up to $1,900. So that's more than 2 times your money in just a 3-year period. And that's why I like to diversify, right? Typically I'll have 5 to 20% of my portfolio in precious metals, and sometimes it's 5% if there's not a lot of these news stories going on. Maybe it's a little lower. If there's a lot of these news stories going on and they're bigger news stories, it's more towards 20 and possibly even at times higher than 20%. But I move my money in and out of precious metals just like I do with stocks and CDs and real estate and other types of investments. It's about understanding the market and the type of news going on, and sometimes just moving your money around and also diversifying. I'm definitely not one of those people that says put as much money as you can into precious metals. I think that's not smart at all, but there's definitely times when you want to invest more and times when you want to invest less. Again, these news stories headlines are when you possibly want to start investing more towards the 20% or more mark if you're seeing a lot of them and it's big news. So with that said, let's go to number 2, and that's political instability. If you're seeing things like wars going on, which we're seeing a lot of today with Russia and Ukraine and other countries starting to get involved, or any type of major election going on, we got a big one coming up in 2024 in the United States. These are the times when the price of gold and silver is more likely to go up. And again, the bigger story is, the more likely it is to go higher and higher. So number 1 is really 2 things together because they kind of go hand in hand, and that's economic uncertainty and also a global crisis. And really, when you have a global crisis, you kind of have economic uncertainty, and sometimes when you have economic uncertainty, it can kind of be a global crisis. So an example of this could be COVID-19, right? I mean, COVID-19 was a global crisis. I guess some people still call it a global crisis, and it caused major economic uncertainty. So it's kind of both things at once. Other examples of either of these things could be, Ebola. Ebola was 2014 to 2016. 2010 to 2012 was a European debt crisis. We had the 2008 financial crisis. You had the dot-com bubble in the early 2000s. The terrorist attacks in the United States in 2001. All these type of things considered times of economic uncertainty or a global crisis. Again, they kind of go hand in hand. They usually work with each other. That's probably the biggest one on the list. That's why I have it at number 1, because that is typically when the prices of gold are more likely to increase than others, and it's more likely to go higher. Okay, so pay attention to all 5 of those news headlines, and again, the bigger they are, the more you possibly want to start investing a little more and paying a little more attention to precious metals. With that said, let's move into the bigger picture. Now, with the bigger picture, I'm going to start talking about money and also currency, which is what we have today. Now, money is something that is actually backed. Okay, when you have money, it's typically backed by a high value commodity such as, food or gold and silver or something along those lines. When you have a currency, it's typically not backed by anything. But if you look back in history, all the money systems, all the fiat currencies typically don't start that way, right? In rare cases, they start that way, but those are very short-lived. So we can say in general, fiat currencies never really start that way. Societies usually have a high value commodity such as gold or silver to back the money, right? So that's typically how it starts. Gradually, governments will introduce paper money notes, or paper demand notes, I should say, that are redeemable in gold or silver. These are really like CODs or certificates of deposits or receipts or something along those lines. Now, once paper currency is introduced, it's typically expanded through deficit spending, and this is where things really start to get interesting. Because once it's expanded, well, that's when the money starts turning more and more into currency. Now, at this point, usually there's like a national emergency or a war or something along those lines where people start to get nervous and they want to redeem their certificates of deposits or their receipts. And there's a problem because then they can't be redeemed because there's nothing backing them. So the governments will typically suspend the redemption rights because they don't have enough gold or silver to back these receipts. And then poof, this is where fiat currency is created. And that's where we are today. We're deep, deep, deep into a fiat currency that is being printed more than we've ever seen in history. So that kind of talks about the difference between money and currency, which, we don't have money today, we have currency because it's really not backed by anything, and that's more and more becoming the case every single day as we print more and more money and become more and more in debt. So let's take a look at history now. Let's go back to the Athenians, and this is considered one of the greatest civilizations of all time. And they were flourishing for a long time because they were on a kind of gold standard, so to speak. What happened is what keeps happening in history, and that's they had a war, right? This happens out of greed, right? I mean, greed leads to war, which leads to demise. It's just human nature. People get greedy. The war lasted much longer than they expected. It lasted 22 years. And after this 22 years, well, much of the money was spent. Notice I said money, not currency. After all this money was spent, well, guess what happened? Well, they needed more money to keep funding the war, so they started printing money. Except their printing was a little different. What they did is they started realizing, well, if you take 1,000 gold coins and you mix in copper with them, well, you can make 2,000 coins out of it. That starts deflating the money. That starts devaluing the money, right? It's the same thing we're doing today, which is printing, just on a lower scale because you still have the gold mixed in there. But each coin is really at its core worth a value less because it has less gold in it. And that's where their downfall really started, because they started printing money, so to speak, as we do very, very aggressively today. And really, it's called deficit spending, and again, our government is doing it every single day of the year. And this was actually the first time that there was an official government currency that was not gold or silver. Pretty interesting. So after the Athenians, and again, you can imagine, you can look at history and look deeper into it, but eventually, of course, they fell. But it all started with that war, which transitioned them out of money into currency. And it happened again, and it happened again, and it happened again. But the next time it happened was with the Romans. And the Romans didn't learn from the Athenians. And just like the Athenians, they started with money, right? They had a gold standard. But eventually, they went away from that gold standard. But they also added in something new, and that is welfare. Yes, the Romans introduced welfare. They kind of invented welfare, so to speak. And there was a time where 20% of Rome was on welfare. Well, guess what happens when you have welfare? You need to pay these people in welfare. Well, you don't have the money to do it, so what happens is you print money to do it. And that's where money starts turning into currency. So wars, public work, social programs, these are the type of things that we can't afford, so eventually leads us to a currency where we're printing money to pay for these things. Then when we do that, there's nothing backing our money because we go more and more towards that, which means there's less and less things backing the money, and eventually there's nothing backing the money. So eventually what happens in all of these cases and many other cases in history is there's a mass movement out of the currency into precious metals because people see that they start waking up. They realize, okay, something's going on here, something's wrong, and they start going towards a more tangible asset. So that is where the currency collapses and there's a major wealth transfer. And I personally believe that and as do a lot of very smart people, that we're very close to that period because we're in a time where we're printing more money than ever. We're in more debt than we've ever been. I think we're at a time in history where we're probably the worst we've ever been as far as a currency goes, like as far as being deep into currency away from money. And that could lead to some big things. Like when people talk about the collapse of the dollar, a lot of people look at that as, oh, it's conspiracy theory. Well, we may be a lot closer than you realize, okay? And I don't want to go too deep into this video because this is more about news headlines, but I want you to understand that there is a bigger picture and you need to understand the substance behind it. Often people look at people who invest in precious metals as kind of like kooky and all that, but look at history. It's not kooky at all. The people in power want you to believe that because they fuel this system. I don't know if you're aware, but the Federal Reserve is actually not federal at all. Okay, it's not a part of the government, and actually the reserve part, there's no reserves. There's nothing backing our currency. The Federal Reserve is actually a private corporation that has no audits, right? They've never been audited. That's crazy to me. And they just print money and control our economy as they see fit. This is not the government, this is private. Again, this is something for another video. I just want you to understand that when people say that precious metals are like kooky and people who believe in that are kooky, that is something that the news wants you to believe because they want you to keep following the fiat currency because that's what benefits them, that's what they control. All right, but we're going a little off topic here. Keep in mind those 5 headlines I introduced. Also keep in mind the big picture. Maybe start looking into that, doing some research, and you'll see that our current situation today is a little different than you may believe, and we may be very close to something very big happening. See y'all in the next video.